some uncertainty, although markets are up 30 points on the Dow Industrials, expected to add on to that 56-point rally yesterday. There's some debate on what the administration policy will mean for markets. Joining us right now, Senior Portfolio Manager at SkyBridge Capital, Troy Gayeski, and of course, you are salt.
Let's not get carried away.
SkyBridge, you are salt.
SkyBridge is salt. Yeah,
that's why we are here.
Salt free.
Our host. Good to see you, Troy.
Good to see you too.
So
Maria.
you've got all of these incredible hedge fund managers here. What are they saying about markets right now?
Look, I think there's two major themes. The first would be that you want to target investments that should do well fundamentally, but can benefit from the tailwind of regulatory relief. When you look at this administration, there's one thing you're fairly certain they can accomplish is targeted and aggressive regulatory relief. So things like financial services in terms of the credits backed by regional banks, the energy complex, particularly midstream producers like MLPs, that's one major theme. Another major theme is that if ever there was a time for Europe to outperform the U.S., it's probably the next 6 to 12 months. You have much better growth there, better inflation data, the ECB is still doing QE, you have a reasonable valuation discount, you have better earnings. And last but not least, the flow data looks very good because Europe had been liquidated the past several years, and you're finally starting to see inflows of capital again. Yeah,
we've been hearing that on this program as well for a long time, actually. But he said something interesting, Robert. You just said people are still expecting that we could see the economic policy happen, and as a result, you want to buy stocks. But we've already seen what the president has done in terms of executive orders on rolling back regulation. That's as well really important for this market.
But I think that the markets still need to see a legislative win. And as much as we may not like what happened the past week, a lot of the hedge fund managers and money managers think that forces Congress to act more swiftly. So, you know, we can talk about the rhetoric left, right, center, but at the end of the day, people want to see something done. And I think the House is going to really focus on tax reform. Whether they can get it done this year, I'm just not sure.
Jagan, what are you hearing?
But in terms of, then you start getting into the timeline of how swiftly that they can act. If it's not this year, then that means for particularly rough markets between now and at least December, Robert, don't you think? I mean, is that what you're hearing?
Well, it definitely could be a bumpy ride because there's a lot built into the market. But Troy, I think you said it, you know, what a lot of people aren't focusing on. Europe's doing well, doing better than the U.S. And actually the markets have done better than the U.S.
Correct.
And as much as we're up 12%, they're up even more. And
well, they still have free money going on.
Yeah, so there's a little buoyancy going on around the globe right now. And, you know, people don't always look at every economic number.
That's what Ben Bernanke told us.
Yeah, and don't forget, emerging markets are doing better as well. They went through a really tough patch at the end of 15, early 16. So global growth away from the U.S. is as strong as it's been in several years.
And you could look at it like this. At least we know that we're not going to get higher taxes, even if they're slow to act at tax reform. We're not going to get higher taxes. We're not going to get more regulation. You have an administration that is not going to make it more difficult to do business.
And there's a base on the energy floor. There's like a floor with energy. You know, the last few years we haven't had a real floor in energy. There's been a real volatility to it. That helps the emerging markets, you know, more than most places. You know, if in Latin America, South America, and Africa, if energy does well, you know, they seem to have a better comeback.
It sounds like you would be putting new money to work in Europe. In
Correct.
energy?
Yeah.
What else?
In also financial service credit. So regional bank, one of the few things that Washington agrees about, Democrat, Republican, Senate, House, White House, and to the Obama administration's credit, they started this, is that community and regional banks are overregulated. And so we've already seen meaningful regulatory relief. We're going to continue to see that. So if you can play it through that select niche, we think you have very good risk reward. And whether, you know, Dodd-Frank gets repealed or not, it's really irrelevant.
Right. And one thing that I agree with Troy, you know, Shelby has been fighting this continually, that they want to make the level of those institutions that are financially systemic at a higher level. So they don't want it at 150 million, they want it at 250 million. So a lot of the large regionals won't have the same regulatory burdens as they have today.
Jagan spoke to Shelby actually this week, and that's exactly what he said. Troy, great to see you. Thank you so much.
Great to see you too. Great to see you guys.
We appreciate you joining us today. SkyBridge Alternatives, that is SALT.
That's correct.
SkyBridge Alternatives. Thank you, Troy Gayeski.
I thought it was Scaramucci.
Yeah, well, that's why I said you are SALT.
It might be,
SkyBridge Alternatives. It's also Scaramucci, I guess. Troy Gayeski, good to see you.